Nikhil Nigania. He's director at Bernstein Johnson right now on the show. Nikhil, good morning to you, and thank you so much for taking the time out and speaking with us. This is Neeraj here. Good morning. Before we get down to the brass tacks of how would you look at this bucket, which has also seen a correction with the rest of the market, just a word on power demand. I, for one, didn't think that there was any material dip necessarily, but clearly, as Mihika is saying, that there is a pickup seen in the last few days and weeks, and factors point towards an uptick and a significant one in demand for the next few. How have you observed the pulls and pressures in the pocket in the last, let's say, quarter or thereabouts?
For sure. Thanks for having me on the show. So firstly, on power demand, see, that is the biggest driver of the sector. For any capex to happen in the sector, for any growth that way is, and earnings as well for merchant power plants, power demand is the most important thing. So power demand, historically, India used to see like 0.8x of GDP, real GDP kind of a growth multiple. Last 3 years, 2021 to 24, it grew at 8-9% CAGR. That's why the sector did so well during that phase. Last 6 months, though, power demand growth slowed down to low single digits, even dipping in some months Y on Y. A key reason for that being high rainfall. February, as rightly said, February we finally saw some demand uptick. First 14 days saw 6.5% power demand growth. Long term, our view is 1x of real GDP growth. That's how we would forecast power demand. That's our base case forecast of power demand. And globally, it's accelerating. Globally, as people switch from using energy in terms of fossil fuels to electricity, there is an acceleration of power demand, which is the medium-term story we have for power sector. But near-term, though, to be honest, is difficult to predict. We saw a lot of trades happening into summers for power shortage. But first half of this calendar year, at least our expectation is power demand might not grow as fast given the high base that we have of last year. And as you also mentioned, weather possibly could be warm, but not as warm as last year, which is a big driver for demand.
Nikhil, just wondering about what the best prospects are. So you mentioned that it's tough to predict, but having said that, you've also said that the best is likely behind for wind and thermal equipment and transmission and capex estimate revisions as well. I'm just wondering what the implications of that are, because you don't only play the power producers, you also play the transmission and distribution players, you play the equipment manufacturers. Are you essentially saying that the valuations are too high to justify where they stand right now and the prospects are not very bullish going forward?
No, see, overall on the power story, we are positive, but there are pockets or themes where we see some headwinds. So medium term, we definitely think the power capex is going to be massive in India. But the spaces where we see headwinds, number one is wind. Wind, as we have said earlier, wind land acquisition for wind, getting large, good land parcels with wind speeds is very challenging. So while the intent is there by the government, executing wind power plants are not easy. So that is why we are a bit concerned on wind. On thermal equipment, again, we love NTPC. It continues to be our top pick. But thermal equipment per se, the challenge we are seeing is batteries as well. So batteries have become very cheap, much faster than anyone envisaged. So when we are trying to solve for non-solar hour power, battery becomes a good challenger to thermal power beyond what government has planned. And third point is transmission. Transmission as a theme, we are positive. But we don't expect further capex revisions to happen beyond what the government has already announced, which is 9 lakh crores by 2032.
Nikhil, sorry, come in on this one, because the story, and rightfully so, I'm not saying it's a wrong one, but the story that comes out after every quarter from some of these wind power equipment companies, for example, right, is about the 500 gigawatts by 2030, wind's share out there, because there's only as much that solar can do and hydro can do, and therefore wind is inevitable, if you will. But I hear you say that there is an issue there. I saw your note which says PPAs are not getting signed in certain cases as well. So are the valuations prohibitive for some of these wind power equipment companies or even power generating companies, if you will? And again, the reason that I ask this specifically is because, like every other sector, this sector has also seen price derating, and people would believe that if indeed the Q3 results or the commentary is anything to go by, then the things are smooth, and therefore this give an opportunity. You beg to differ.
So on valuations, to your point, so if you break it down into two parts, valuations for developers and then valuations for equipment suppliers. So our coverage is more on the developers, which is the likes of NTPC, Power Grid, etc. See, developers valuation, if you look at the global multiples, globally utilities trade at about 10 times EV/EBITDA. The state-owned companies, which we like, NTPC, Power Grid, today are at about 9x EV/EBITDA. So they are cheaper than even global peers, not just Indian peers for that part. The private utilities, though, are slightly pricier despite the correction. They are about 12 to 14x EV/EBITDA. So hence our preference towards state-owned entities to play this trade. Now, coming to equipment suppliers, we don't cover those stocks specifically. But what we can see from a demand perspective is wind, for example, as you said, government is very keen to push it. Orders look very good for new wind assets. But even if I quote a renewable CEO who earning call happened just a couple of weeks back, he said it's unlikely that India will see more than 5 gigawatts of wind come in a year, right? And government aspiration was at least 10 gigawatts a year of wind capacity addition. Because A, land is a challenge, as I said, and B, battery is also negative for wind, right? Because for non-solar power, people were going to wind, but now they can go to batteries as well. They can reduce wind, increase batteries, given how cheap they've become.
Interesting. So, and you've already mentioned, I'm just reiterating, NTPC, Power Grid, and you like REC PFC as well. The last point that I want to raise with you, Nikhil, is, and it's interesting, I saw this in your note, nuclear energy. You find it interesting, you find it a good prospect, but the thing is, you say that you would be very surprised if a private player takes a jab at it, and that's based on how regulations currently stand. How do you play this theme, if at all? Because a lot of people argue, yes, of course, if India has to achieve its targets and its power needs, will definitely have to be served by nuclear, whether it's modular or otherwise.
So nuclear as a theme, I mean, and the government push is very fair, right? I mean, again, why is there such a big noise on nuclear recently? Everything is to solve for non-solar power, or firm power. People know renewable will come, solar will come. But the challenge is, how do we get base load power, which is there when the sun is not out? Among the multiple options, one is nuclear, which is clean. So that's why the push on nuclear all across the world. And it's not too expensive. Levelized cost of nuclear power is 6 rupees. A new thermal plant costs 5.5, so it's not really that expensive. The biggest challenge in nuclear power plants is the construction timeline. It can take 10 years on average in India to set up a nuclear power plant. A greenfield plant, Gorakhpur, which we are building, the work started in 2018 and expected to get commissioned in 2031. So that's how long it can take. So for the asset to become cash flow positive, it can take multiple decades. So that's why we feel it's a risk one should take only if you have a cost plus kind of a business model, which state-owned companies do, but not private ones. So we are not super keen on private developers chasing this opportunity, given how long the construction take and the risk associated. To play the theme, either you play a developer like NTPC or the JV with NPCIL, or you play the equipment supplier. So L&T we cover, which does the engineering construction work for nuclear power plants in India. So we like L&T, and then there are smaller names which we don't cover, like Walchandnagar, etc. But we don't have a view on them since we don't cover them.
Nikhil, unfortunately at this time, we can only spend so much time on a conversation, but this was so good. I was wondering if on nuclear, the NIMBY effect, which is not in my backyard, comes into the picture as well, and all of those conversations. But I would urge, Nikhil, at some point of time in the next 2 weeks, if your calendar permits you, to join in for a slightly longer conversation, because it's a fascinating story and some of the insights that you've given in your report are worth putting out there. So looking forward, hopefully, to talking to you soon.
Same here. Thank you for having me on the show.
All right. That's some very good insights.